A red day in the market today as Bitcoin drops from its all-time highs of 73.5k down to around 65.5k. And in this video, I'm going to explore the possibilities of whether we have already bottomed or we are in for a larger correction, and also answer that question of should you be buying the dip. So let's get straight into the charts, and I'm going to start with a quick history lesson of what happened in the last cycle. So if you're new to the space or you weren't around in the last cycle, you probably think that bull markets are very easy, just sit, hold, and the price goes up without any sort of shakeouts or any volatility or scary moments. I'm afraid that is not the case, as we can see from the charts here. So back in 2020, so we'll start with this first correction here back in January 2021, where we were about 42.5k, and we had this drop off, this sell off for which lasted 3 weeks, which was a 30% correction, as you can see, down to about 29 or 30k. But the result of that was a huge rally up to 58k, which was almost double, so going from about 30 to 60k, as you can see. That then led into another sell-off, as you can see here, from about 58.5k, another 25% correction down to about 43. Again, rallied from there, another 36%. Then we had the drop from the new all-time highs, which was 64.5k, and that was about 26% drop. Another rally before the big one, the big clanger, which was from 59.5k all the way down to 30k, which was a huge 50% correction, which happened over a 2-week span. Then we had that consolidation, and then the market bounced very hard. You can see from 30k straight up to 50k without really pulling back at all. That was a 78% rally. Then another correction from 53k down to about 40k. Again, another 25% pullback before the final rally we got, which was from 40k back to all-time highs, and then made new all-time highs at about 69k, which was a 73% rally. So as you can see, during bull markets, Bitcoin often gives these 20 to 30% pullbacks, which should be looked at as a gift and an opportunity to get in on the things either you didn't get into, or you missed your allocation, you didn't get as much as you wanted, or simply a chance to reload some profits back in and make some extra capital. So let's take a look at what we've had in this cycle so far. So we've had only a few pullbacks, and not that big either. So the first pullback we had was about 25k, and we dropped to 20, and that was about a 20% pullback. Next one we had was again around 32k down to 25k. That was about 22%. And then finally, the most recent one was back in January, where we had this ETF spike, so from 48k down to 38k, again only about 20%. So you can see the corrections in this bull market have been a lot gentler than the ones in the previous bull market, only about 20%, but we've not had one for quite a while. You can see we've been up only since the 22nd of Jan, the past 7 or 8 weeks. So we've been conditioned into thinking every dip is a buying opportunity, every small pullback, etc. So there is that possibility that we are going to get a larger flush, a bigger correction in this instance. So what I've got here is two lines. So we've got a line here at 65.5k, which you can see we bounced off already this morning. Now this is a significant level because this is the highest weekly candle close from the last cycle. As you can see, back in November 2021 we spiked higher, but this is where the two weekly candle closes occurred, and that's where we started the sell-off and entered the bear market. The next level we've got is 60.5k. So this is a significant level. I've pointed this out before. So this was the previous resistance back in 2021, March, April, and May of 2021. And then when we finally cleared that level, it was a strong support all the way through October 2021. And it was the level that we broke or deviated, which then meant the sell-off started down into the bear market. So two significant levels there. So my thesis here is that if we are just in for a short-term dip that we may have already bottomed from, this weekly level here at 65.5k should hold. So as long as we get a weekly candle close on or above 65.5k, I think we're good for short-term continuation. However, if we get a weekly candle close below 65.5k, then I think we're in for a deeper correction to around 60.5k, which is that significant level there. If we then have a look at what that retracement would be from the top down to that 60.5k, that's about 17-18%. Of course, we could wick and then have a candle close back above. So it's in around that ballpark of about a 20% pullback. To add further confluence, if we just grab the fib go from the bottom to the top of this rally, because we've now made new all-time highs, you can see that the 236 lines up very nicely with that 60.5k. And then if we take the fib and go from this most recent impulse from that 38.7k level, you can see that the 236 and the 382 line up very nicely with those two levels. So the 236 being that most recent level here at 65.5k, and the 382 lining up with that 60.5k. So that's my thesis for BTC. It's very similar with Ethereum. So if we take a look at the weekly, again, we didn't quite make it to that 4126 level that we talked about before, which was the top of the December 2021 rally. However, exactly the same thesis in terms of if we're in for a short-term pullback and we're going to revert higher from here, then this weekly candle should close on or above 3,500. As you can see, we've already tapped that this morning. If we get a weekly candle close below that, then I think we do go for a deeper correction down to about 3k, about 3,060, which again, significant level. It was big support here all the way through August to September 2021. The start of this leg of the rally here from September to the previous all-time highs. And again, support here on the way back down in January 2022. Broke it at support, heavy resistance until we finally deviated it, and that was the final bear market rally in March and April 2022. Lost that level, and that's when we went to the lows of sub 1,000. So again, very significant levels. And if we take a fib from this leg here from October 2023, line it with the top, you can see that the 382 more or less lines up quite nicely with that 3060 or 3060 level on there. So I think that lines up pretty well. Again, if we go for the retracement from the top, and if we were to go down to that 3060 level, that would be a 25% pullback on Ethereum as well. So I think those levels line up quite nicely. BTC down to 60.5k and Ethereum down to 3060 if we are going to get that deeper pullback. However, as I say, we may well have already completed the pullback by tapping these two more local levels here. We'll have to find out when the weekly candle closes on Wednesday. If we then add further confluence, let's take a look at the total 2 chart. So this is the total market cap excluding Bitcoin, so pretty much all alts. Now we've got 2 significant levels here, which you could argue is a range. So range low here of 940 billion, range high of 1.25 trillion. So you can see this bottom level, this range low, significant level of resistance and support all through from June 2021 all through to January, February, March 2022, and this 1.25 trillion level, heavy resistance all the way from Jan 2022 and April 2022, and now you can see we've rejected it more recently this week as well. So 2 significant levels there. So what this looks like to me, I'm not really big on my chart patterns. However, a real big obvious one here is the cup and handle pattern. So what you tend to expect from these patterns is, as you can see, big round shape, cup shape. And what you normally see is the handle forming a bit like a flag. So what we could end up seeing is something very similar to this over the coming couple of weeks, where we see price come down in this sort of channel, hit this 940 billion range low, and then explode upwards, break out from the range highs and continue upwards. If we also grab a fib and have a look at the confluence there as well, so from the bottom to the top, you can see that that 0.382 level again lines up very nicely with that 940 billion weekly range low. So there are some signs there that we may well be coming down for a deeper retracement as well. If we take a look at some of the altcoins, so I've got a random list of altcoins here. If we just take a look at what the retracement we've had so far from the highs down to today, you can see ADA is down about 12%. AVAX has retraced not that much actually, only about 10%. BNB has retraced 9%. DOT, let's take a look. Again, 12%. FTM, something that's been performing very well over the last few weeks, as you can see, since of that breakout of the range high. That's retraced about 15%. NEAR's been on a tear recently. Let's take a look at that. That has pulled back about 18%. So what I'm trying to get across is the question of, should you be buying the dip? So obviously not financial advice. However, what I would say is that if you'd been FOMOing over the last couple of weeks about things getting away from you and not having your bags allocated, etc., so things like NEAR and stuff like that, we've had a nice decent pullback. We're on a solid level of support here on BTC and Ether. We've already bounced off it. This could be the local bottom and we could move up from here. So what I would be saying is the things that you feel like you're missing out on or didn't have a full allocation on, well worth allocating some capital in. But what I would say is don't blow your load and allocate it all. Keep some back. If we do retrace deeper, as I talked about, BTC may well go to that 60.5k level. Ethereum may well see 3050. And this total 2 chart plays out as a cup and handle pattern. We are going to see further downside for alts over the coming weeks. And if that is the case, you want to still have some capital there ready to allocate. So as we always say in Learning Crypto, always have in the market, always have some money out of the market. That way you can enjoy the volatility of things going upwards. And then when things do come down, you've got that capital on the side, some dry powder to deploy, ready to buy the dip. So hope you enjoyed the video. Drop in the comments below what you think is going to happen next. And of course, don't forget that we have an exclusive offer with our sponsors from Blowfin Exchange, who are offering a return of 500 USDT into your account, but only if you sign up using the link below. So no KYC required and open to UK users. So be sure to check that out. But in the meantime, have a good weekend, buy the dip, and I'll catch you next week.